Hey traders, welcome to Charts and Coffee. Just got the coffee, good to go. Happy Friday, everybody. Good to see you all. All right, so as always, shows about your questions. We're just going to jump right into it because I can see out of the corner of my eye here, the folks from the power company, FP&L, are here to do some work on our meter. I don't think they're going to cut the power, but they've been cutting it this morning. So I thought, you know what? Let's jump into the questions just in case we have some technical difficulties here. So we'll just jump into it. I do want to remind everybody, and especially those of you that have the notes that I send out to everyone, you know, one of the first lines on those notes, whether those be the weekly notes that I send out to you all, the sector and macro economic notes, or the daily notes we do, one of the first things we check is what kind of hot zones are we going to be dealing with. And you can see here, we've got Williams at 10 a.m. So heads up for that today. All right. And then another heads up, I'm sure we'll talk about it a couple more times here before we wrap up, because I do not want you to miss it. Monday, very first bonus session, we're going to do a deep dive on watch list building, outperformance, the indicators that I use to do that, the multi-charts. That's going to be on Monday. So if you haven't checked out what we're doing over at the Sector Secrets Mastery, that link is sitting right there at the top. All right. Oh, and last housekeeping, we've got some awesome free updates over at countdowntrader.com. Just updated a few on the 15th and 18th. Really good updates as to how I'm looking at the markets. Really good supplement to what we do here in Charts and Coffee, the blog, the newsletter, whatever you want to call it, over at Countdown Trader. Always free indicators available there for download as well. All right, so let's get to it. Coffee time. Yeah. So let's see. I am scrolling through the questions, and there we go. All right, first question. New mastery member as of this week. Very cool. Very cool. Thank you very much. I'm stoked too. You know, our community is growing, and always love new and awesome people that we can chat the markets up with. Absolutely stoked. Thanks for joining us. Do I still see XLC? Great question. So two of the narratives, and I talked about this. We did a Q&A session after the close yesterday. We're going to have another one, basically what we call it the Ask Me Anything session, Fridays at 3 p.m. We're going to be in the mastery. We're going to be in the futures. And we're going to be in the options room. So we're going to be doing a really thorough Ask Me Anything session. And I already know that we're going to have a few topics because I've got folks already asking. And I think, there we go. Questions about cash accounts, outperformers with the multi-chart, volume ledges, what is scalable trading, questions on gold, bond, and stocks. We have a lot of questions already keyed up. Folks have emailed me. So XLC, I'm sure, is going to be one of them. Tech has been on a tear. There's just no two ways to put it. We've seen a lot of strength in the indices. But one of the things that I've been trying to hopefully steer our traders to and through is the fact that we don't have to care what's going on in the indices right now. We really don't have to be concerned about whether or not indices are going to keep moving higher, if tech stocks are going to keep moving higher. Because right now, for those of you, especially in the mastery, you know we have two places we have exposure for really sort of the broader equity markets. Everything else is housing, oil stocks, Freeport-McMoRan, so a proxy on copper. So we've got to play in Brazil, right? We're playing Brazil. We're playing things like wheat. So we're really playing the inflation narrative, which is a very different narrative than what we're seeing in tech. So with that being said, XLC is the weakest corner of tech. So the good thing is we've got a lot better chance to be able to withstand some of this short squeeze and some of this legit bullish Momo that we're seeing in tech without necessarily getting our paper cuts stopped. Now, if we do, they're paper cuts, right? We're taking small losses, not large ones. And so I'll throw CLOU in there as well. This is what we teach in the mastery. When you send out an alert, you know two things right away. You automatically know where to cut that trade, right? Number two, you know where the target is. We're nowhere near the target right now. So this is really a matter of withstanding that no man's land of, hey, we're nowhere near the target, Rog, but I realize we're not quite to the stop loss yet either. So, do I think it's a valid? Sure. Here's what I would say. Knowing what we know now, as opposed to when we first got in, knowing that we are always scanning for new opportunities. Folks ask, Rob, can we get into this now? I would put a small position on this if you're going to do it all. But I think there might be better corners of the market to focus on. So that's where we say, knowing what we know now, a few sessions in, would I still prioritize this as a short? I probably wouldn't. Is it short a bull? Yes. Is the only direction that I would engage XLC and CLOU to the short side? Yes. Is it something that I want to do? Well, if I'm thinking about how I want to prioritize my capital and put it to best use, I can't say that today it would be near the top of that list. Does that help tackle what I'm seeing? Directionally, I'm still very bearish. As far as getting in today, do it with maybe no more than half size, maybe quarter, okay? So that way you're reducing risk by way of controlling position size. And by the way, since you're a brand new member, you know that the must-watch video that I send out to all new members is the 20-minute breakdown on position sizing and stop loss placement, our understanding of budget, affordability, paper cuts. So be sure to check that out. But great question. Thank you very much. Next up is, do I think the bearish sentiment is over in the Nasdaq futures? So let's talk about my dear friend, Charles Dow. When we think about the way in which trends tend to transition, there's going to be a very brief period of time where there's bullish momentum within the context of chop, right? And I mean, when we think about bullish momentum within the context of chop, I think one of the most important things to remember is, where are we in relation to the 200? Can we have a trend in a market that's bullish without being north of this? Usually not a high quality one. So as of yesterday, we did break the 200. So we're just barely on the north side of that equator, as I like to call it. We're in barely the bullish hemisphere. So what do we do now? Do we buy? No. What we remember is we are still in chop. We see that there are some previous highs in this area. I'm not, and this is where I'll say, the question really is not, and this is a really important one. The question isn't, how do I short the NASDAQ, right? The question is, why do I want to trade the NASDAQ at all? And when you ask that question, you start to crack open the NASDAQ. You start to look at XLK. You start to look at XLY. You start to look at XLC. Everyone with me so far? This is so important. You're getting a little bit of a taste of sort of the mindset of what we do in the mastery. The question is never, what do I do with the NAS? Right now, I'd say nothing. I think there's far better places to put capital to work. The question is there an outperformance? And this would be to the downside within the pieces of the NAS. So maybe it's XLK, XLY, XLC. Right away, you say, wait a minute. 3 sectors weighted within this larger index. K is really pretty strong. Y is sitting right at the equator. Y means I can crack open the consumer discretionary corner of the market and look for where there still might be downtrends. Starbucks is within XLY. TJ Maxx is within XLY. One of our best shorts within the Nasdaq was Nike. Nike is weighted within the XLY. XLY is heavily weighted within the Nasdaq. But we wouldn't necessarily tie Nasdaq and Nike, would we? And yet it is. It is. So that relative outperformance, that outperformance mentality, if I want to short, is this the best example of doing so? And my answer is no. Doesn't mean that I want to buy. Please hear me out. It just means I think there are better places that we could put on a trade with that expectation that the path of least resistance is still to the downside. And that's where I stick with XLC. And that's where I look at Facebook. And that's where we can look at things like, within XLC, we also have Goog and Google. So, but which, by the way, I got some questions about Google early on today. When we squeeze in some volume, and I take a look at where there could be some interesting resistance, we've got a point of control about where we are right now. I would not short Google, right? I would rather short XLC or Facebook. I'd rather go short, Disney. You see the difference? It's not how we're trading. It's what we're trading, right? That's why I say what we trade is more important than how we trade it. The shift that most traders need to make, and I'm going to tell you all this, gang, is not a new secret squiggle. If you're looking for a particular indicator to answer a question about the market, fantastic. Simpler has some of the best ones, right? I use a number of them myself. Even ones that I haven't made. There's some great indicators we have. But I'm going to tell you, the way you turn the corner isn't with a new secret squiggle. It's not with a new strategy. It's with, what am I trading? Now, if you start to apply the secret squiggles, that's what I call an indicator. If you start to apply the secret squiggles to a better built watch list, now you're going to see you're just firing on all cylinders. So when I sit down and I'm working through a trader who's struggling in this market, really any market, but this one specifically, where the wheels fall off the wagon isn't that they don't have great indicators. Of course, if they're a member of Simpler, they've got some of the best. It's not that they're lacking strategy. We talk about teaching a lot in all the rooms. It's what they're trading. It's the symbol list that they're focused on. I hope that makes sense, right? So then you ask about NVDA. I'm going to run it through the same process, right? I don't want to trade NVDA. In fact, it's not been something that has had a lot of clarity since the 10th of February. See, do you see where we're focusing on things makes a big difference, right? A lot of folks have asked me about SMH, and I say, well, how about we look at Taiwan Semi? See the difference? So this is where good ideas sometimes are met with symbols that aren't necessarily giving us the best clarity. And if that's confusing, or let me put it another way, if that's starting to get some wheels turning, you're thinking, Rog, I'm kind of getting it, but it's not clicking. That's our very first, this is the most important topic. That is our very first bonus session on Monday. So really stoked about that conversation. So Michael, I hope that addresses the questions you have about XLC, CLOU, and NASDAQ, respectively. All right, next up, Coop. LRCX, sure. We're going to ask the same set of questions. So if you're wondering, okay, Rob, can you give me a little bit of the construct of this process? Sure. Let me give you a little taste. Where is LRCX? What group of stocks is this moving with? That takes us to sector ETFs. That takes us to ETFs. Second is you've got to do a relative performance check. What is outperforming? Is LRCX the best example of a market that I could short? It looks really good. South of the 200, red grab candles. The last 3 sessions have been a little neutral, but if there is going to be a short here, let me show you something. Let's start with the volume ledge. And yes, gang, we have volume ledges on toss now. Big thanks to, oh gosh, Lorna, who am I thanking? You, but one of our members. Oh my gosh. It's too early and my coffee hasn't kicked in. The bot will tell me here in a moment, no doubt. But this is where the community is so great. One of our members was talking to Lauren and said, I think we can recreate the volume ledges, Raghee's volume ledges on TOS. I think Nick was one of them, but no, there was somebody else too, something W, right? Somebody else too. But yeah, so we have Dennis W. So Dennis and I think Nick, thank you so much. Love our community back at the Mastery. And so Dennis, if you're watching, thank you, buddy. There's your volume ledge. We're going to show you how we can do them on TOS as well. What else? Take a look at this. Boom, right there. So there's your Darvis level. The Darvis level right in here. And is that the only Darvis level? Yeah, I think so. So that zone right there, they're green. I should really paint them red. Between the two dotted lines and that volume ledge. If we're going to exhaust in LRCX, two ways you can do this. First, find the price zone. Second, if you're using ready, aim, fire, awesome. If you're using a slow stochastic, like I've been teaching you all, that's fine too. You know, whatever secret squiggle, mine or somebody else's, that resonates with where is there an overbought resistance. Identify it with price, then transition to the resistance. So again, this is a Darvis defined level. We got a purple and yellow Darvis. The colors really don't matter. I get that question a lot. They really don't matter in terms of support and resistance, but that is the zone that ideally we reach, that the slow stochastic reaches the 80 area. We get an overbought read because that's the high, right? You look at a slow stochastic as finding the high low within the range, right? 80 is the high, 20 is the low. We're getting there. We're not quite there yet, but you'll see we're also at the lower half of that zone. So that might tell you, hey, we could go a little bit higher. We could maybe tag that volume area, maybe a little bit higher before we succumb to sucking back down into that range. So that's why I would look at LRCX specifically, but please do the step that's so important that precedes the setup. Before the setup comes the scan. Scan meaning, is this the best example of stocks like LRCX that I could short? So great question. Thanks, Coop. All right, crude oil. Do we want to play crude? You know, one of the transitions that we are making in the trading that I'm doing is, as it pertains to crude, is do I want to play crude anymore? You know, the narrative around the way in which the Russian-Ukraine narrative is affecting crude leaves us pretty vulnerable to really dramatic moves to the downside if and when, hopefully when and soon, that this thing comes to a resolution. All right. We have then the possibility for a pretty abrupt move to the downside. Oil stocks probably won't have that same move. So no, I don't know if the bottom's in, because Nikolai, watch what happens if we get news that there's some sort of, you know, resolution of what's happening over there. No, I don't think the bottom is in. So do I want to see pullbacks? Absolutely. I think we could pull back a little bit more, but this is reason number 750, okay, that we do not buy highs in a trending market. How many traders are vulnerable in oil stocks or oil haven't bought in this area? Now, if you've been watching Charts and Coffee, you're not one of them, and that makes me exceedingly happy. We don't want to do anything up here. We want to wait for the market to get down to preferably, you know, just some support. I don't know where that is right now, to be quite frank. I have not decided yet what that is ultimately going to be for us. And you're talking about someone who's been actively buying crude since even before Ukraine, because it's been in an inflation uptrend, right? I'm probably, Nikolai, going to focus more on XOP, OIHXLE. All right. So I hope that makes sense. All right. Next up is thoughts on ZIM. You know, I know we talked about this one clearly because I have it all marked up. I don't have any skin in this game, so I'm probably the you know, I don't know that I would necessarily tell you, hey, just jump into it. But, you know, we have some cool things happening here. volume ledge and volume ledge. I think we pointed out this volume ledge yesterday. There's another volume ledge right there. So this whole area in here is really interesting for potential support. Notice this. We've pulled back pretty dramatically before. So when we do pull back into the wave, it's not as if the wave just holds it at a shallower retracement. We've pierced it before. And then if we, well, let's do this. Can I copy paste here? Let's see. Paste. Awesome. Well, where did it go? Well, take a look at the last time that we did this, right? Back in here. So take a look at the nature of that pullback. Looks kind of familiar, right? Looks kind of as if when we do pull back into the wave, it's not always going to be this clean bounce right out. It's going to pierce it. It's going to look pretty dramatic, you know, minus the gap this time. And look, this is X dividends minus the gap. This looks very much like pullbacks that we've seen before. So now that we've not just got into the wave, but we've actually pierced it. And I would even say more so, we have now touched the 55 propulsion. See that dot right there? See that there too? We've hit that before. So this will be the second time we've done it. You can look at this as a minor low, meaning rather than buying today, although I think it is valid, rather than buying today, you could wait for the market to break above, say, 75.35. So I do like this, generally speaking, as a buy, but I have no insight into ZIM. So this is where, Eric, you want to do a little bit of a search as to, you know, what was that? That's a pretty dramatic reaction post X dividend, right? What's the narrative around this? Why are we down here? And then once, you know, if it's something like a broker downgrade, fantastic. Those are the gifts that keep on giving. I usually fade those analyst brokerage downgrades. But if it's something else, a little bit more structural, you're going to want to be aware of that. All right. So thank you for that question on that, Eric, on ZIM. All right. Again, just like that, we are out of time and I have run over. So as always, thank you for being here for Charts and Coffee. Thanks for dominating and caffeinating with us each and every morning. We'll be back on Sunday. Remember, we have our Sunday sector notes Sunday show. We're going to take a look at the, you know, kind of the open and sort of the bigger picture look at what I'm expecting into next week. What are the trends that have emerged? And I think today's close is going to be pretty important to see where, especially tech, especially Nasdaq, and I would say relatedly, the 10-year bond end up as we end this week. All right. So that is it. That is it. And let me see here, quick symbol or anything. No, I think we're good. I think we're good. So yeah, the $17 dividends, the pullback isn't so bad, says Rick. Yeah, so again, get that reasoning. Rick, thank you very much. That's a great follow-up to Eric's question. That's why I love the community, gang. Have a terrific weekend. As always, be good to each other. I know you are. And if you're inside the membership, I'll see you in the afternoon. I'll be in the chat, kind of looking at some ideas with you in the sector mastery. Of course, we have our Ask Me Anything session at 3 p.m. I'll be on the mic then. Be good to each other. Talk with you soon.